Hey guys, how we doing? Doing an update as usual. I'm gonna start with crypto today because it got smoked. BTC it went down like 8%, maybe more. I don't really see how it closed. So we'll start there, and then I'm gonna hit on some of the markets, how we traded today on the prop team, just a little trading recap, and then just talk about the details on a webinar tomorrow. Again, 3:30 Eastern. You can sign up. How to do that? We're gonna talk some of our cyclical strategies, and I'm gonna explain some of the prop program. I had a couple of you interested and just going to talk about what we're doing there, what we're excited about. And okay, BTC, we went over this in the live room today, and I hate starting out videos like this is what we thought was going to happen. No, yeah, this is why we haven't bought anything. I mean, I don't know how else to say it other than that. This is how important these cycles are. And when we talk about not failing to make a new higher high on the turning point here in October, it's about not making a good call and trying to pat yourself on the back, or it's not about that. It's about just the probabilities and watching and seeing these things play out and having a game plan. And it just gives you the confidence or just the ability to kind of sit on your hands when, as much as we want to be long Bitcoin, as much as we like it, as much as I think it's going to be a great hedge the next 3, 5, 10 years, especially against the new monetary system as it resets. Gold will have its part also. Obviously, there's going to be massive moves in currencies and the bond markets. But a little bit of Bitcoin, guys, can go a long way. So, I mean, I don't know if you guys kind of went through some of these numbers, but if the last 5 years, if you just had 2% or 1 to 2% of your portfolio in Bitcoin, you'd almost have doubled your portfolio just on the performance from BTC alone. It's how much it's gone up. So just a little exposure to this asset class can go a long way. But there's a time for that. And so this is why these turning points are so key. So we talked about in October, failure to make a higher high. I'm going to try to speed this up because I've gone through it a few times. Lower highs, lower highs, lower highs, lower highs. This was a pretty quiet base, and we talked about the next moves here, the next moves here. That doesn't sound like rocket science, but literally, what else is the market going to do? It's not going to go sideways forever. So what you want to look for is we were looking for a breakout on this turning point, and that would to us signal that we can have another higher high or another leg up past the previous high that you had in the summer. Well, what happened? We took out these lows, right? This big fat red bar, failure to make a higher high on this turning point. Then the call was you're going to be sideways to down, most likely into December. And what have we had? Sideways, and then now looks like we're going to get another leg down. So this is just from a timing perspective, the cycles. I want to focus on December as a key turning point. Price can do several things, obviously, before then, but you're not going to get another big bull market move until probably at least December. All right. And so you got pie down here. I'm going to hit on what I think about the price and the trend, and I'll clean up these cycles, and I'll do that on the other chart. But the other thing I wanted to note was we made a low on this turning point. Okay, you bounced to a high basically in front of this turning point, and then we reversed. All right, so you may see a temporary low on the near to intermediate term here in the next, I think this comes out to be like 26th or 27th. We looked at it this morning. All right, so that's how I play that wave. But again, ever since we broke here, I have not been adding. It's been more about defense and raising cash than trying to pick a bottom here. Now the other thing, let's talk about the actual price and trend. So Bitcoin, from a trend perspective, So here's that same break. When we broke down through 10,000, there was some support in front of 9. This is what we call real money, fat real money bar. It shows you real selling to create that move. And that usually those types of bars have follow through. So that's what we got today. Pretty technical break. I don't know what the storytelling was, the reason why, but anytime this market has such a clear level that breaks, it creates a lot of selling. And these markets are so thin that you can have quick, fast, exacerbated moves. So here's this green line's our pie line. We also had a 200-day on the futures chart that may or may not trip some traders up. So we'll see if we can hold that. But the mistake that I see a lot of traders make is just because you move below the 200, guys, especially when it's rising, that does not mean it's a short. You've got pi right below there. A lot of times it'll catch that. And so I talked about my team this morning at 6,500. I actually want to take some risk and put a little bit more BTC on. And then the old base that broke down to put in the low at 3120 in futures, we rallied, we broke out through that. Now we're going to test the underside of it, which is not that illogical. I mean, a lot of markets will do retest areas they break out from. So that's the key spot. Now, if you cannot hold that on a daily, weekly level, then there is some risk that you can go back to the double bottom, put in a double bottom type of move back to 3120. And there's no reason why you can't put that type of a low into December with that major turning point. I don't honestly think we're going to get that deep. I think you'll probably hold the sold breakout lows. It actually looks a little bit better in futures. But let's watch pi on the daily. And I think we're probably going to bounce around here and be sideways until, again, that turning point in December. December is actually, just from a calendar perspective, it's starting to be a little bit cyclical because we made the old all-time high into December also. So that is that. I would be defensive. You can raise cash. But again, we weren't buying in here. This is no man's land in our model once we broke down. And so I don't really like to stop into our pie line. If anything, if you took some risk off when we went through 9,000, then you put it back on down here at 6,500, 7,000. I'm okay with that. But again, you don't need to be aggressive. I think if you have a decent amount of cash in the crypto portfolio is a good way to be. I'm not going to hit on the alts in this video. Other markets. Today we saw follow through on the euro. So we had another, well, in the morning we had some follow through on the euro. It was dollar down. Sorry, it was dollar up. Sorry, this morning into pi here, and then we reversed, test the underside of the 200. I'm actually not surprised that we failed there late in the day. You can draw a regression channel here down the top. This is the bottom of the range here. Right? I'm just being lazy, but that's your regression channel. So actually a good spot to cover euros this morning. I don't have a whole lot to do other than kind of probably look to sell more of a near-term bounce again into tomorrow. We've got a bunch of PMI numbers in the morning out of Europe. And then I guess I'll just talk about what we did in conjunction with, well, treasuries. I had a pretty good day. I've been core long, kind of highlighted some of that in the live chat. So this is our cycle edge over here. It's our cycle edge membership. What do we do? We covered some puts that we sold when we were on the lows in gold. I'm still out of the money of our core long position in gold. That's just been choppy, didn't going nowhere fast the last 2 months. That's about 82% though. You can still turn out and trade around your core positions, and I mean, $780. That's more than most people collect on an investment property, and you can get involved in gold futures for a lot less than that. So I like to generate a little bit of cash by trading around those positions, selling puts on the downside when you're oversold, and you get overbought, you can sell some calls on the up. Tens, pretty nice day there. We're still building a core position. I think we're trying to turn the corner like I talked about yesterday. So we're long twos, tens, and bonds. We actually came out of our 10-year notes right into the highs today. I think I sold 04 on the mobile in the car. I sold 04. Then we bought a little bit back and just spit it out once we were done with the rest of our trades. So our day trading, to review that today, went 4 for 5, and just trading pretty small. Really, it's about as small as you can get, and still pulled out over close to $500. And we were done trading within 15 minutes of the open. So this is the skills I teach you guys in the prop program. I mean, you're going to learn all kinds of stuff that you can apply to any trading and investing, from core strategies, adding and reducing. When you guys join our prop program, you're getting all the courses I've ever made: options, forex, pi cycle trading secrets, intro to options, the whole directional model that we built on the institutional desk, which is 9 hours of everything that I've put together in my career, 10 plus years institutional, 15 years total trading directionally. So you get all that, and then you get to spend every day with me, trading every morning, putting trades on, taking risks together. It's just completely different when you do it together. And then on top of that, this is your account. You keep all the gains. You're going to have your own buying power. I think it's the best way to start it. When I started trading, I wish I had something like this, where I kept the gains. There's no commissions in this account. But it's a tight group. I mean, I always had to start off with courses and then just banging my head on the wall by myself. I kind of went the long way route, and then I had a couple mentors along the way, and it wasn't until I really sat on the institutional desk and saw what guys did well and what guys did poorly, that kind of we made the real tweaks in the model, and then the timing components with the cycles came out. Anyhow, so what did we do? We did euro. What did we do on euro? I just forgot. We came in. We were short into this. We sold off in the morning and off that pylon and bounced, and we reshort the 15-minute cycle. It didn't really break, and we didn't want to give any more back, so we just stopped on that. S&Ps, one of my guys had a good call that, the market seems to be pinned to 3,000. So we bought the dip on that against our Russell short, and we came out of that pretty early. There's a little bit of gains there. The key was actually the Russell, where we sold into it twice or 3 times. Oops. I think I might need to show you another chart a little bit easier. So the downtrend kind of looks like this. As we started to rally back up, we faded it, and then on the open, we just literally dropped. So we were kind of fading this cyclical bounce, using kind of this as our risk. And we did chase S&Ps. Let me show you what we did in S&Ps on the other chart. So then we covered into the lows, and that was pretty much it to call it a day. Tens, I'll just show you tens real fast. Tens, tens, there's that sale up at 04, and then we rebought the dip and just said, forget it, call it a day, got out. So on the other chart, it's a little bit easier to teach from. So on the Russell, I guess the key takeaway for you guys want to care to watch these videos is, and this is good recap for me, you should be doing this in your trading, any of your trades. When you're journaling, you should recap your trades because this is how you cement what you did right, what you did wrong. Just like any good athlete is looking at their film so that the next time they see that same setup, it's burned into their mind what to do. You don't have to, you don't have to go through the whole computation process in your brain while the market's moving. Like, what did I do last time? Or what should I do? I can't remember. Or what's the process? It's just, that's not how it should just flow. You want to be in the zone. It should just flow. When you see it, you just you know what to do. So this was the downtrend that, oh, sorry. This was kind of what I was playing here. Now this hourly will show you a little bit more of what I mean. So we haven't broken the bands. 30-minute was actually kind of, the bands were laying on top of each other, which is more indicative of a range trade, but we're playing a little bit more of a bias short on the Russell because of these daily cycles. I won't get into the global macro, but the pairs trade has been short Russell, long S&P. So the concept was here on the 5-minute. We come in, there's a cycle that's a little bit high like this on the 15-minute, 30-minute. And we come in and I see this starting to break down this morning, and I don't want to miss a move like that to start the day. All right. I don't really care what happens in the rest of the day. We're gone by then. So we short this bounce. It starts to break. We shorted more. And at the same time, we went long S&Ps against it. All right. And the reason you do that because as S&Ps, as this cyclically bounced back up, we ended up shorting another lot in here to prove our average, but buying S&Ps kind of allows you to comfortably sit through this cycle. And then we got the lower high, they smashed it on the open, and then this is where we were covering like that. Boom, 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 boom. And then what we did in equities at the same time, that's the 30-minute. I remember the 5-minute. I remember the 30-minute. Oh, okay. So right here, we were a little bit long from somewhere down here. And then we said, all right, as we faded this Russell a little bit more, if you're short 3 here, 3 contracts, you're only long 1. I said, all right, now if we get above this high on the open, we want to add to our long exposure. So that's what we did. We added. I think we got a little pullback on the 1-minute. This was a pie line on the 1-minute down here. We sat through that. And then this is how you play both sides, guys. This is what I can't teach you in the videos, and it'll take you so many years to go through this on your own to perfect it. But this is how we play the two off each other. And when you're trading with me on the team, this is exactly what I'm going to go over this tomorrow. This type of stuff is how you're going to run the plays. You're going to run these plays with me over and over and over. And that's just, they'll become a part of you, and you'll own it, and you'll have these skills for the rest of your life. So we're short, boom, market gets hit. We're covering, making money there. And then I'm also watching, I don't want to have a huge drop in the S&P, so I'm watching where I would start to puke or kick this S&P long out. But first it starts to break higher. That was right here. It's right here. First it starts to break higher when the Russell did this. S&P started to do this. We got a little bit more long. Then they smashed that, took our profit. S&Ps were still holding in. We had a little bit of a pullback, but you held. We got to cover our Russell, and then as soon as this popped back up after holding trend here, then we came out of our S&P. So that's how you're able to make money on both of these, even though one was one way and the other was the other way. One was short, one was long. So that's pretty high level trading. It's a very consistent way to do it, but at the same time, you're not just on one side of the market. You have more optionality, so you're a little bit more hedged. It's a better way to trade. All right, guys, hope that helps. So for tomorrow, I want you guys to go, if you want to sign up for the webinar, it's 3:30 Eastern, tomorrow's Thursday, right? And Jenkins CM, JenkinsCM.com, JenkinsCapitalManagement.com. This is where we're running our prop program, managed accounts, the cycle edge stuff. That's our membership. We have our real-time alerts and our live room just for an hour on the open. That's about $100 a month. It's quarterly. It's $3.99 a quarter. You guys, if you're interested in that, we're signaling all markets. We have like a 82% win rate lately on our signals. A live room, analysis, just a good team environment, but it's obviously not nearly the price as the prop program. And I digress a little bit there, but the next webinar, you can click right here. That'll sign you, that will, you can register your spot. And again, I'll go over, it's pretty laid back. So if you guys have Q&A questions tomorrow, we can ask, I don't care about whatever markets, and then go over stuff, do a little bit of teaching, some cyclical strategies, and then I'll explain some more in depth on the prop program and the progress we're having. Some of the guys are doing really well. One of my guys that's been with me a couple of years, he came in and just blew the cover off the first phase, did $9 grand in like 10 days, and he's already on to the next level. So that's what's possible. The model works. You guys have a great night, and I'll see some of you on early in the morning.